Of course, there's going to be a lot to ponder in today's session, not least of all a data drop in an hour and 15 minutes time domestically and inside the tiger economy. Julia, to you, if we just focus in on Woolworths to begin with, they've upped their profit guidance, but the market seems more concerned that their troubled hardware store's not going to reach even break even for another 3 years.
We have seen an update coming through from Woolworths, and I guess on the positive side, from continuing operations, what we will see is what we have seen is a profit upgrade from 4 to 5% net profit growth to 5 to 6% net profit growth. But we have also seen an update, as you mentioned, Carsten, around the master stores, and it looks like the loss is going to widen in the current financial year related to trying to expand their hardware print in Australia. Not only that, they have come out to say $120 to $140 million as well in terms of potential impairments there. So just watching Woolworths very carefully. The profit upgrade is a positive. However, the update around the master stores and the impairments, that's really, I guess, what the market's also going to be keeping an eye on, and unfortunately a negative performance by Woolworths today.
Evan Lucas.
The W's, and that's Woodside, which is being sold off not terrifically steeply. Julia, how much of this was, I suppose, priced in to today's announcement? I suppose the headline being the impairment charge on projects that just haven't come to fruition.
That impairment charge wasn't for Woolworths, it was actually for Woodside Petroleum, sorry. And that impairment charge of between $120 to $140 million, some of that related to the amortisation of the Pluto 2 and Pluto 3 trains, as well as a tie-up that didn't occur. But if we have a look, Woodside Petroleum today coming out with its second quarter production numbers. If we have a look at the numbers for the first quarter, we did see production at 21.9. So the second quarter numbers at 20 million barrels of oil equivalent is a slight decrease. Same with on the revenue side. In the first quarter we saw $1.45 billion. It's coming at $1.35 billion for the second quarter. There are some things we know about Woodside Petroleum's business. We know that the Vincent project, the restart, is not until October this year. So that we knew a few weeks ago, that we would see a delay in terms of getting Vincent back up and running. And Vincent's important because prior to the shutdown that we saw, it was the top oil contributor. If we have a look at what it contributed to oil production in 2012, it was 36%. So that's obviously having an impact on the oil production side. Also, Pluto's resumed after a glitch there, and we know that there's been planned maintenance of the Northwest Shelf, which has also impacted on production for the quarter. But no huge surprises coming through here. Woodside Petroleum back in July did a few weeks ago cut its guidance to 85 to 89 million barrels of oil equivalent for the full year because of some of the problems it is having at Vincent. So I don't think a huge surprise for the market. Woodside Petroleum shares have been performing quite well in 2013 so far. The shares are up by 12%, and that's been helped along by the high oil price. And remember, its dividend policy has also changed, so that payout no longer 50%. They're aiming for an 80% payout ratio to give shareholders more of a dividend.
Equivalent to the gold space, the backdrop's a weaker gold price overnight. Silver Lake is getting absolutely slaughtered, losing over 6%. Still in the west here, it's calling time on developing a mine because that low gold price, it's perfect storm. High cost-in story, it's not feasible.
No surprises here. We have seen this theme emerging with the gold miners, where they are looking at shutting or delaying some of their high-cost Australian gold projects, and Silver Lake coming out to say that it is not going to proceed with this Australian gold mine due to the lower gold price for the time being. So Silver Lake shares obviously hurting there. Adding into the mix the fact that we did see gold prices down by 1.3% means the whole sector will probably be coming under pressure today. We did, however, see a positive lead from the US markets, and I guess one of the things that has happened this week is that we have seen the material sector outperforming. It's been the best performing sector on the market. We'll probably see a bit of a pullback of that theme today. On the flip side, though, the defensives have really been sold off this week. The utilities, the staples, the telecom area. It looks like investors just shifting out of some of those income type sectors into more of the growth sectors ahead of earnings season. And of course, we're watching earnings season. Today's a good day. We've seen a profit upgrade coming through from Woolworths as well as Austral. So just watching those little announcements ahead of earnings season, and it looks like companies just running their ruler over the numbers at the moment.